estate investing has always been seen as a great way to build wealth and to give you excellent tax benefits. But real estate investing does not come without its financial risk. That is why in this video, I am going to be breaking down for you the pros and cons of owning real estate from a tax perspective and making sure it is the right strategy for you. But before we jump in, you know what to do. I need you to like, comment, and subscribe so you don't miss out on any of this wealth building information. Now, let's get after it. Tax benefits of real estate investing are massive. One of the biggest benefits of owning real estate is your ability to take what we call depreciation. Depreciation is a complicated topic, but at the very minimum, I need you to understand that depreciation allows you to recover your cost of investing in real estate. It gives you that opportunity to write off the cost that is allocated to the land. Because you have to remember, when you purchase real estate, there's the dirt that is never going anywhere, and there's the building that sits on the real estate. And real estate gives us this great ability for future appreciation. This is why a lot of people who purchase real estate will turn around and sell that piece of real estate and level up to a higher end piece of real estate. But they can do it tax-free by using code section 1031. That means 1031, tax deferred exchange. I can sell my house for a duplex for equal or greater value. I can sell the duplex and go into an apartment building for equal or greater value. So it gives me some excellent benefits when it comes to owning real estate. In addition, you also want to think about the deductible expenses that you get when you own real estate. If you rent out your rental real estate, you're going to be able to deduct the insurance, you're going to be able to deduct the repairs, you're going to be able to deduct your travel to your rental. And of course, if you have a mortgage, you can deduct the mortgage interest, and you can also deduct the property taxes. So owning real estate can be very lucrative. Real estate is not without its financial risk and challenges. At any given moment, the real estate market can show volatility. There's fluctuations in the market. Real estate has a tendency to double in value every 10 years. But at any given moment, your real estate can be up and your real estate can be down. That is why when you are investing in real estate, you really need to make sure you're in a position to hold firm when the real estate is going up and down. You really need a stomach of steel when you are investing in real estate. I don't know one person that has invested in real estate and has truly lost money if they were in real estate for the long haul. So make sure if you're going to invest in real estate, it's going to be a long-term investment. Are you going to hold, wait, appreciate, and then do a 1031 exchange to purchase more? When you're dealing with the financial risk, you also have to consider property management, because when you own real estate as an investment, you need to either manage that property yourself or you need to hire a good property manager. And I am just going to tell you, when you find a good property manager, be looking for your next good property manager, because typically what I have seen, property managers only last about a good 24 months, maybe 36 months if you're lucky. So make sure that you have a great property manager, and make sure you treat that property manager well, because you want them to keep your property at top of mind. In addition, you want to understand the complex tax rules around owning rental real estate. When you own real estate, there's so many different rules, whether you're owning that property as a homeowner, whether you're owning that property as a traditional long-term rental, whether it's a mid-term rental, or whether it's a short-term rental. And the rules change according to how you are owning the property, the use of service of that particular property. So it's important that you understand the various rules associated with owning that real estate, and making sure whomever you're going to work with when it comes to your taxes, that they understand real estate taxation, because it's an animal in and of itself. When you own real estate, something else to be aware of is long-term gains and short-term gains. A lot of people who own real estate, they like to buy, fix, and flip. When you are doing that type of real estate investing, you're typically in a short-term gain scenario. And short-term gain means you own that real estate for less than a year, and you're going to get hit with ordinary income tax rates. So the capital gains rates on short-term holds are the regular income tax rates. However, if you hold that property for a year and a day, you cross over into the long-term capital gains rates. Long-term capital gains rates can be down as low as 0%, 10%, 15%, and tops 20%. So if you can get yourself in long-term capital gains rates, you can really benefit from owning your real estate. And remember, you can always do a 1031 exchange if you decide to sell and level up to another piece of real estate. That's so important because many times I'll see clients sell their real estate, don't sell it under a 1031 exchange transaction, and still go buy more real estate. When you're doing a 1031 exchange, it needs to be from the onset of the sale. That needs to be in the contract so that you can avoid gain at all costs. But if you're gonna have to pay tax on gain, let it be at the long-term capital gains rates. One of the things that's really important as a real estate investor is strategic tax planning. When you own real estate, there are so many nuances and so many great areas of the tax code that can really help you out when you own real estate. There's Code Section 167 that gives us the depreciation. There's Code Section 469 that allows us to become real estate professionals. No, I did not say a licensed real estate agent. I said a real estate professional, which allows you to write off all your real estate losses against other income on your tax return. This is why planning when you own real estate is mission critical. You need to be planning right now. Don't wait until tax time to plan when you own real estate. You want to make sure you're planning whatever month it is, but don't let December close, December 31st, and you're having champagne celebrating the new year. It's too late. You want to plan all year long as a real estate investor so that you can really get the benefits and squeeze out every dime out of your real estate. Because if you look at some of the wealthier people, they own real estate and they plan around it with various strategies, and you should too. For making it this far in the video, I want to give you a bonus tip. One of the tips is make certain you have good record keeping. If you bought your real estate 7 years ago, 5 years ago, 10 years ago, and you're getting ready to place it in service as a rental, you're going to need to have your original closing escrow statement. That's the HUD-1 form, which is the number of the escrow form that you received from escrow. It's so important to have that document. In addition, if you don't have it, look up the escrow company that helped you with your transaction, because I'm sure they will have it. Plus, you want to also keep track of any improvements that you've done to the property since you purchased it. Maybe you had some landscaping done. Maybe you had a nice patio put in. Maybe you poured some cement. Maybe you've done some additions to that property. All of that becomes so important when you own real estate and will give you great tax write-offs. So make certain as a real estate investor that you understand how great your real estate is. Make sure you understand how to level up without paying tax. Make sure you understand how to get the best write-offs for your real estate. And the most crucial thing is to make sure you are tax planning so that you don't miss out on any of your money. And certainly you don't want to leave Uncle Sam a tip. So at the end of the day, now that you know better, you know you got to do better. That is why I need you to share this video. I want you to like, comment, and subscribe so you don't miss out on any of this wealth building information. Now, go get after it.